In today's video, I will be doing an in-depth analysis on the company Gilead Sciences. Stock symbol is GILD. They are a large maker of a hepatitis C cure as well as an HIV treatment and many other drugs. So I will start off by looking at Gilead's efficiency to generate cash. So we'll start by looking at their return on invested capital. So pretty much right now, their return on invested capital is at 31.6%. This is crazy. This means that from the capital that they are investing into their company, they are generating a 31.6% return. This is great because it means that they'll be generating great returns on all future investments and current investments that they are making into their company. Gilead Sciences also has an amazing free cash flow margin at 54.27%. This means that from all of their revenue, 54.27% of that revenue goes to free cash flow. This is crazy. It's a ridiculously high number for any company, and so that is great to see. That means that pretty much almost over half of the revenue that they generate is going right to free cash flow, which can go to paying dividends, doing share buybacks, which they have been doing a lot of recently, and growing their company. So that's great to see. Now for a quick look at their Morningstar page, I will start off by going over their margins and return on assets and return on equity because I'm looking at how efficient the company is right now. So if we look, the operating margin and the net margin are 57.6 and 43.4% respectively, which means that the company has really, really tremendous margins. They are generating tons of profit off of their revenue, and that is always good to see. Their return on assets is 24 and their return on equity is 74.7, which also means that they are using their assets and equity very efficiently and generating great returns off of them, which is also good to see that they are being efficient there. And then for Gilead's revenue growth and net income growth over the last 3 years, the average revenue growth has been 40% and the average net income growth has been 64%, which is really nice to see. I know that their growth has definitely slowed down recently and they've even declined slightly in revenue and net income. However, before that, they proved that they were great at generating growth, and I think that they will return to strong growth in the future. Gilead also has a ridiculous amount of cash, and that cash pile is just continuing to grow. In December of 2016, they had $32.3 billion, and in March of 2017, they had $34 billion in cash. And so this is like a third of their market cap is just sitting in cash right now, which is crazy. So that means that they can use this for large acquisitions, which the market really wants to see an acquisition from Gilead. They notice that their revenues and earnings are dropping and they really want to see an acquisition. So good acquisition would be a tremendous catalyst for the stock price. And the cash that they have is also going to things like buybacks and dividends, which are good to generate shareholder value. So this amount of cash is great for the future of the company. They have a very strong balance sheet and are very financially healthy. Gilead is also trading at a ridiculously low price to earnings of about 6.6 right now, which this is crazy to see a company that is as efficient as Gilead at generating cash, has such a huge cash pile, and they're trading at a 6.6 price to earnings. I think the market has just been really bearish on them, and the sentiment is really bad right now, but all it needs is a quick turnaround in sentiment, and I could really see their price going up a ton due to this low valuation. So if you look at the 5-year average, their 5-year average price to earnings is at 17.6, with their current price to earnings at 6.6, which is means they're trading a lot below their 5-year average. And now there was more expectations for growth a few years ago when their hepatitis C franchise was continuing to generate strong growth, and that has definitely stopped, and hepatitis C is shrinking. So that definitely means that it is justifiable that they're trading at a slightly lower price to earnings than before, but at a 6.6 price to earnings, that's really just crazy, and I think that it is time for their share price to go back up. And Gilead is currently paying a 3.16% dividend, which is great. That means that if it's currently trading sideways, so that means that you're getting paid to wait for it to go back up, and I really don't think it's going to go down from here. It might trade sideways for a little bit longer, but I really don't see very much downside, so you're getting paid to wait for the increase in price. So now we will take a look at the performance of the different segments of Gilead's business. So if you look at the hepatitis C franchise, that's the one that's in serious decline. Year over year, their hepatitis C franchise is down 40%. And this is not ideal at all. This is very bad. However, this is only about a third of their business, so the other parts of their businesses are doing well. If you look at HIV and hepatitis B, that is up 13% year over year, and their other products are up 8% year over year. So as a whole, two of the three segments of their business are growing very, very well right now, and hepatitis C is just the one thing that is being a drain on their revenue and profits. And at some point, their hepatitis C franchise, the drop off is going to stabilize, and I think it's just going to plateau. It hasn't found that point where it's going to plateau yet. I'm hoping it will be soon, but it's really difficult to predict. But the market has pretty much totally valued out their hepatitis C franchise, which isn't really fair because it's still generating strong profits for them. So if you look at it, it's really hepatitis C is struggling, the rest of their business is doing well, and the market has pretty much taken out hepatitis C, even though it's still generating money for them. And another huge opportunity for Gilead in the hepatitis C space is in China. Gilead has, like this headline says, they disclosed China manufacturing plans on a recruitment website, which pretty much means that Gilead is going to be expanding their hepatitis C franchise into China at some point in the next few years. I really don't think we'll see that until 2018 or 2019. However, Gilead has no sales whatsoever in China right now, and so China needs hepatitis C products, and Gilead expanding into China could generate significant returns from their hepatitis C franchise, similar to what they were experiencing in the United States before those sales dropped off. So that is a huge catalyst for Gilead in the future. Gilead also has a very strong pipeline right now. As you can see, they have several HIV products in phase 3 studies. They have a hepatitis C treatment that is in regulatory submission. And hepatitis B, they have a phase 2 and a phase 1 study. And then for NASH, which is non-alcoholic fatty liver disease, they have one drug in a phase 3 study and then a ton more in phase 2 studies. And so that is good to see. I think that NASH is going to be a great future for Gilead Sciences. Here is a slide from their investor presentation about NASH, which shows that there are quite a few people who have NASH and they are looking to treat this. They have quite a few drugs in the pipeline for this, as well as they are probably going to make an acquisition at some point when they see a company that has good value to them, and that could very likely be in the NASH space. So I think that they're going to be first or second to the market with their NASH treatments, and that will generate strong returns for them in the future on that. Then additionally, Gilead Sciences has quite a few more drugs in phase 2 and 3 studies in oncology, as well as inflammation/respiratory. So hopefully some of those drugs will generate strong returns for them in the future. It looks like they have a very solid pipeline, and they've been spending a lot on R&D recently, so that should be able to generate new products and new income streams for them in the future. So pretty much Gilead Sciences is a great company that is generating cash very efficiently. They have a $34 billion cash pile, roughly 1/3 of their market cap. They're trading at a 6.6 price to earnings ratio, and they have a 3.2% dividend. All in all, I think this is a great buying opportunity in July of 2017. I know that I am very long in Gilead Sciences. I have quite a few shares. So thank you for watching. Please remember to like and subscribe.